Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy you could join us today. Before I welcome today's guest, I'd like to thank our 2025 President's Council sponsors. Now, these are companies that provide a tremendous amount of financial support to the California MBA, in large part to support our advocacy efforts because we are the voice for the real estate finance industry before the California state legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Consolidated Analytics, Funding Shield, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kiter, and Western Alliance Bank. Thank you all so much for your support this year. We truly appreciate that. And so that brings me to welcoming today's guest. I'm happy to be welcoming Mark Wilson, who is CEO of Advisent, formerly CWDL. Mark, welcome.
Thank you for having me. I'm excited to be here.
Of all the years I've known you, it's kind of like a surprise to me that I haven't had you on Connect yet. So I'm glad that we're finally making this happen. I always kind of like to start these off similarly, just kind of a little bit about your background and tell us how you got into accounting services specifically for the mortgage industry.
Yeah, happy to share. And once again, thanks for having me. So I started in the mortgage industry really as from the public accounting side. I graduated from college and I joined a local firm, and they specialized in auditing mortgage brokers at the time. They had some independent bankers. And I just got super interested in how these lenders were making money and how these loan officers were making a ton of money. And I'm coming out of school, I'm a CPA, and they're all doing much better than I was, at least financially. And so I started digging in and really started looking at the economics of the industry. Was able to bring on new clients as a result of that into that firm. And eventually one of those clients recruited me to be their CFO. So took that route, left public accounting, became a CFO of a seller and servicer of debt, and learned a whole lot more from the other side of the table as a CFO. I kind of learned that I had a lot to learn, is really what I learned through that experience. Was super interesting, learned about securitizations, and then eventually got recruited to be a CFO of an independent mortgage banker. You may remember them, Valley Vista Mortgage out of San Diego. Some great guys. I think now they went to Bay Equity, which of course Bay Equity's gone through all of their changes and whatnot. Um, and then from that experience, thought, man, I can do this myself, and went and raised some capital and brought in some partners and launched my own mortgage bank. And once again, learned that I had a lot to learn. It was a super interesting, fun experience. But, as the market started changing at that time, I was really looking for some answers, reached out to my CPA firm at the time and, like, what's going on in the industry? Is there, I know things are really tough. Or is there anybody making money? Where are warehouse lines going? All these different things. And didn't really get any real answers. And so I sat my wife down and said, I know we haven't been making any money really at the time. I said, but I have an idea. I think I'm going to go back to public accounting, and I will launch a firm, and we're going to specialize in that in the industry. And I'm going to go find the smartest people I can find and try to build a firm around that. And so that's what I did. We went and we found a list. It may have been a CMBA list of approved brokers in the state of California. And we made a postcard and mailed it out, probably with the last bit of money we had in the bank, and took a risk and offered 10% off of any audit that they had paid for in the prior year, and we're off the races. And that firm, I think we did about $110,000 that year in revenue. But I knew it wasn't much, but we're on to something. And so we started to get some traction, and that firm is what's evolved into what we have today. So that's kind of how we ended up here.
That's exciting. I love good entrepreneurial stories. That
Yeah.
is, and I don't know that I knew that you had had a mortgage bank for a while. So that is
Yeah.
interesting as well. You have a very unique perspective, certainly from various angles, right? Of
Yeah.
the financial management and the runnings and operations of an IMB, largely, our membership. Of course, you
Yeah.
have,
So I've been a member as on the vendor side and as actual lender side. So
yeah.
from multiple companies actually, but yeah.
Well, you have some big news that just launched, which is, of course, the rebranding of your company. What was CWDL is now Advisent, which is pretty exciting. Why a rebrand, and kind of tell us a little bit about the journey to Advisent.
Yeah, I'm super excited about it. First, it's kind of interesting. I think I told you a little bit about that journey. We started off as Mark Wilson CPAs back when we launched. Eventually, I brought on partners, and so the partners were Cosolius, Wilson, Dominguez, and Levitt. That's where CWDL comes from, and we used to go by all those names, and then eventually we dropped those and just became CWDL. But today, the firm has evolved into much more than the founding names of the practice. We have other partners involved. So we felt like it was a good time to actually rebrand and make it more than just the partners' names on the marquee. So we came up with Advisent because it's the combination of advice and ascend, and it's kind of what we do. We try to advise and give and help our clients reach greater heights. We hope our people can reach greater heights, and we figured it was a good opportunity. Along with that, we joined forces with Crete Professional Alliance. And that's allowed us to be the tip of the spear of the transformation in technology. The accounting profession is changing very, very quickly right now. And with automation and AI, um, we had to look and see how we're going to be able to compete in the long run, given how fast it is and the size of our firm. And by having a national partner um, so that is heavily involved with that really allows us to do that. So we have the same partners that OpenAI has, a Ramp and the Stripe. So all these companies that we have the same partner group from a global perspective, and so we have access to all that now, where before we didn't. So it really allows us to do a whole lot more for our clients and increase efficiencies, all kinds of stuff. So it really, I keep telling our team, we really ripped the roof off of what we can do as the firm, because we have unlimited access to these really smart people to help transform our industry and help our clients along the way.
That's exciting. That kind of leads into my next question, which is how does the rebranding support your clients with their long-term strategic goals? And you kind of started to touch on that, but I think listeners would like to hear a little bit more about that.
Yeah, it's interesting. We spent a lot of time, especially in our accounting services, trying to increase efficiencies, and we've layered in technology that works with Microsoft Dynamics, which is, I don't know if you're familiar, but Loan Vision is built on the back of Microsoft Dynamics, and there's automated tools that interact with that. Um, we're able to now integrate much quicker and automate a lot of that process a lot faster for our clients. And so what that means is they can spend more time doing what makes them money and what doesn't make them money. And through that experience, we're transforming that knowledge to our client base and really hoping to move the needle for them in a big way. So, we're able to do more, spend more time on the client relationship side, which is what the clients really find value in, and helping them make better decisions quicker so they can move in an industry that is under constant change and pressure. So, I mean, the one constant we say in the mortgage industry is change. And you're either growing or shrinking all the time. And so, how are you able to position yourself? What business intelligence are you using to do that? And how we as a firm can position ourselves to help them make those decisions sooner rather than later. This partnership and this kind of as we're evolving as a firm, it allows us to do that. And we're super excited about what that opportunity looks like.
So that's very exciting. Of course, in the years that I've been here, I've seen, the cost to originate a loan just, tenfold now
Yeah.
from when I started. And I know that IMBs are always looking for ways to create efficiencies in their or operations. So it sounds like you are providing a great partnership opportunity for IMBs who are looking to have that. I have always found it fascinating that you have a CPA firm that kind of specializes just in our industry. Where do you see accounting for the mortgage banking space evolving in the next 5 to 10 years?
Well, I think we touched on it a little bit, right? Automation and AI, transaction level accounting is going to be much improved. Loan level accounting has come a long way, and clients are constantly trying to figure out if they're making money or they're not, or where they're losing money. I think in the next 5 years, that information is going to be at their fingertips quicker and better than they ever had it before. So I think that's a huge, huge opportunity. Um, I also think over the next 5 years, accounting services in general are going to be much different. I always talk, if you were to look at a pie chart, and a pie chart today, I'd say 75% of the work we do is very heavily like busy work. Busy, like we're grinding out, data entry, we're getting financials out. I think that relationship's going to change to 25% of that. And then 75%, we're able to give them some real guidance on how to use the information. So I think in the next 5 years, that's going to change. And I also think the mortgage industry is going to evolve also. Um, Digital mortgage, the technology space. I think all of that's going to be much different, and how we interact with that, I think, as a firm is going to be really important and critical to our success and also our clients' success. I see,
Constant change, right?
yeah, there's
Constant change in this industry.
constant change, right? And we'll see what that looks like.
Gosh, and just the AI is touches everything, every little thing, every little aspect of our industry. And it is just wild, just the glimpse I've had of this industry about how much that's evolved. But it sounds like you have positioned your firm to be kind of ahead of that game, and to really provide a lot of valuable services to your clients going forward. So congratulations to you, and congratulations on Advisent. I think it's pretty exciting.
Amazing, thank you.
Um,
One thing I would think, like I would talk to listeners, just kind of thinking in that view of 5 to 10 years out, it always has kind of made me baffled my mind that a small, and this might not be specifically for mortgage bankers, maybe brokers, but the idea that you get a bank statement every single month and it has to be classified into an accounting system is crazy, because the technology and AI exists to already have that done. 90% of all small businesses could get a P&L from their bank statement that's already classified. Like, that technology exists today. So, but they're not doing it. And I think a lot of that's because depository banks they're kind of slow to move. There's issues that are related to that. And they have the system that works, but I think all of that's pretty ripe for change. And the same with the audit features of mortgage bankers are being audited. A lot of that AI is going to be able to dig in and do a lot of that audit work that we do today. It's going to look a lot different. So I want to make sure I answered your question a little bit more fully, but it's going to be a lot different is the answer.
Yeah, yeah, no, it sounds like it. And so much is happening. And that's what we just see right now, right? So in 5 years, it could be, it'll be even more than that. So thank you for giving us that kind of that feedback and background.
Yeah.
We've mentioned earlier in our conversation, your firm currently and previous firms, you've been a member of the California MBA, and you've always been active, big supporter, for which I'm very grateful. Can you share with our listeners why you choose to support the California MBA?
Well, for sure. Obviously, you're the advocacy group for our mutual clients. A big voice, and you all do an amazing job. I've always respected you in particular, strong voice and pushing really hard and attacking issues in a big way and using the organization to move legislation that isn't always written to the benefit of our clients and even the population of California in general. Sometimes as these rules come out that aren't thought of anybody from the industry, they don't understand how it affects everybody involved. And so having a big voice and how well you all do run the organization has always been super impressive. I think your conferences are top notch. They're professional, and it's you can tell you all care. So I think we're happy to support that and be a part of it. And heck, you may have even been instrumental in the launch of the firm when we downloaded a list and sent out a 10% discount if you got audited the prior year. Who knows? I can't remember exactly where we got that list, but it might have been from the CMBA for all I know. I can't remember, but yeah. So why I better support you all.
For all that. Well, thank you. We appreciate it. And again, congratulations on Advisent. And thank you for being on Connect.
Thank you for having me. We really appreciate it.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect. Here we go.